Welcome back to the Deep Dive. Today we're focusing all our attention, really digging into a market that, well, for a long time was seen as this quiet powerhouse. But now, it's rapidly becoming one of the Gulf region's most, let's say, explosive real estate destinations. Muscat, Oman.
Absolutely. It's been fascinating to watch.
We've pulled together a huge stack of sources, heavily weighted toward the economic strategies from Dr. Pooyan Ghamari and the practical side of things from the LM platform.
Right, concocting strategy to execution.
Exactly. Our goal today is simple. Cut through the noise. We want to give you the essential insights. We need to know not just that the market's hot, but why.
The underlying drivers.
Yes, why specific strategies mixing that high-end prestige with some pretty cutting-edge financial tech, why they're yielding such impressive results. Basically, this is your shortcut to understanding a capital city that's really transforming.
A very dynamic situation.
So let's kick off with the hard numbers that really jumped out at us. Property values in Muscat's key investment districts. They've surged over 15%.
Yeah.
Just in the last year alone.
That's the headline figure, yeah.
When you hear that kind of movement, you immediately think, okay, is this sustainable growth or is it just, a bubble, a flash in the pan?
Well, look, I'd argue it's the very definition of sustainable strategic growth. What's really interesting here is that this surge, it isn't built on pure speculation, which, frankly, we do see elsewhere in the region.
Right.
This feels much more deliberate. It's almost a textbook response to clear policy execution. The drivers are foundational. You've got highly stable governance, rapid population growth linked to urbanization, and massive infrastructure investment.
Yeah.
And crucially, underpinning all of this is Oman's Vision 2040. They're actively and successfully diversifying the economy away from oil dependency. Real estate isn't just, another sector. It's a primary vehicle for attracting and hedging long-term global capital.
So it's part of a bigger plan.
Precisely. And Muscat's role as this reliable strategic gateway sitting between Europe, Africa, and Asia, that value is finally being fully priced into its assets.
Okay, that makes sense. Let's unpack that stability argument then. Let's look at where the big money is actually landing first. If we're advising a savvy global investor, we have to start with those premium lifestyle hubs, right? Where are people buying for legacy, for the long hold?
You look immediately to Mouj and The Wave. And these aren't just, housing developments. They're integrated international communities, really designed for high net worth individuals.
The whole package.
Exactly. Marinas, golf courses, controlled environments, the works. They attract a very specific type of buyer who's looking for a permanent, stable home base. Often it's about generational wealth transfer.
The sources mentioned rental yields topping 7% there. And now, wait a minute, 7%, is that sustainable? Or are we seeing some short-term bumps spiking that average? Because 7% is phenomenal for what seems like a low-risk capital city.
It is phenomenal, and it looks robust. Here's why it seems sustainable. First, there's high demand for luxury long-term rentals. Think corporate executives who want that specific premium lifestyle. Second, and this is key, the lack of bureaucratic drag. Compare this to many highly regulated European capitals. The friction, the hassle of ownership, management, regulation, it's significantly lower in Muscat, which means the net yield, what you actually keep, is higher and, frankly, easier to maintain. Investors who got into those specific spots 5 years back, they've seen this model work out time and again.
That makes perfect sense. Less red tape equals higher net return. Okay, let's pivot slightly. Qurum, it's a different vibe, isn't it? More established, maybe more localized prestige. Why does Qurum consistently command some of the highest premiums in the market?
Qurum is premium by design and by history, really. Its value is fundamentally tied to proximity. It's the historical hub, close to the diplomatic quarters, near the big international schools.
Like location, location, location.
Exactly. And that creates this specific, almost inelastic demand for its housing stock, particularly those beachfront villas. The target audience, it's primarily those high-caliber expat families, senior international staff, people who need to be close to that core infrastructure.
Got it.
And this ties directly back into the broader investor strategy we touched on. Oman has cleverly linked property ownership to beneficial residency programs, those golden visa pathways.
Ah, the residency angle.
Yeah. So buying in a place like Qurum isn't just buying an asset. It's a diversification strategy for global citizenship. It provides a practical, long-term, non-financial benefit that really helps stabilize demand.
And that stability must be attracting new capital. The reports flagged a 20% jump in buyers from Europe and Asia. Are they just chasing the residency, or is there a financial insulation angle too?
Oh, it's definitely an insulation play as well. Beyond the residency perks, these investors are drawn by two critical fiscal points. First, tax-free capital gains.
That's huge.
It really is. Second, the Omani rial is pegged to the US dollar. Now, think about the current global environment. Investors everywhere are battling inflation, currency volatility back home. So investing in a dollar-pegged, tax-efficient market like Muscat, that's a pretty sophisticated hedge.
Okay, this is where it gets really interesting, I think. Moving from that residential prestige to, let's call it the economic engine room, Al Qud. That area seems to be getting redefined by commercial opportunity. Sources talk about a commercial real estate renaissance there driven by tech parks.
Yeah.
What does that actually look like on the ground?
It signifies a really strategic shift. Al Qud is moving beyond being just a traditional mixed-use area. It's becoming a defined innovation ecosystem. We're not just talking generic office buildings, no. These are purpose-built, leased spaces designed to function as innovation hubs. We're seeing corporations, especially those expanding into the Gulf, using these specific locations to align their brand with Oman's future-forward, non-oil-dependent vision.
I get the symbolic value, the branding. But what about the actual economic return? Is the demand for these high-tech spaces sustainable, especially when you've got major regional competitors like Dubai or Riyadh just next door?
That's a fair question. The demand appears sustained primarily by logistics and port activity. Muscat's recent port upgrades have made it pretty indispensable for certain regional trade routes.
Ah, the infrastructure connection again.
Exactly. So demand from international logistics firms is extremely high. That projected 10–12% annual appreciation for Al Qud's mixed-use developments through 2030 doesn't feel purely speculative. It seems anchored by the growing use of that logistics infrastructure. It's like an infrastructure dividend paying out through real estate value.
Right. Okay. Let's shift focus again. Maybe look towards the future of investment itself. Sustainability is huge now, and also accessibility, making these investments reachable for a wider global pool. What are the key innovations happening there?
Well, first, you have to look at Madinat Al Sultan Qaboos. That community is really setting a benchmark with its focus on green-certified communities, sustainable practices. This is attracting capital that specifically mandates ESG compliance.
Which is a big deal globally now.
A huge tailwind, yes. But the real game changer, I think, is on the financial innovation side. The sources are highlighting the application of tokenization, and platforms like Ellen seem to be pioneering this.
Okay, let's pause there. Tokenization. For our listeners, even the informed ones who aren't necessarily blockchain experts, how does this fractional ownership of land plots actually work? And crucially, why does it matter for accessibility?
Right. Think of tokenization simply as turning a large, traditionally illiquid asset, like an expensive plot of eco-friendly land in Muscat, into small, digital, tradable shares or tokens.
Okay, like shares in a company, but for property.
Exactly. So an investor doesn't need to stump up the cash for the entire property. They can buy a token representing, say, a 1% stake or even less.
And why does that matter so much?
It drastically lowers the entry barrier. Suddenly, a global investor sitting in, say, London or Singapore can buy a $5,000 share of an asset that might otherwise require $500,000 up front.
Wow, okay.
And this fractional ownership amplifies liquidity. Because those digital tokens, they can be easily traded on a blockchain-backed platform. It turns an asset that might take months to sell in the traditional way into something potentially tradable almost instantly.
Yeah.
It genuinely democratizes access to this high-growth market.
So the tech promises transparency, but how is the actual value, the ownership, legally protected on the back end? That seems like the critical risk question for any investor dipping their toe into this.
Absolutely critical. The protection comes from a combination of the smart contracts that govern the tokens and, importantly, the regulatory framework that dictates how tokenization happens within Oman's freehold zones. The transparency isn't just about seeing transactions fly by.
Right.
The blockchain ledger provides an immutable, transparent record of ownership. It's verifiable by everyone involved, which significantly cuts down on fraud and disputes common headaches in traditional cross-border real estate.
Speaking of confidence, let's circle back to Shatti Al Qurum. It gets mentioned as this huge symbol of investor faith. Why are the penthouses there specifically cited as having doubled in value since just 2020? That's incredibly fast.
Shatti Al Qurum is pure, unadulterated luxury, top tier. Its explosive growth is really a direct correlation between a few factors. Its very finite supply, Oman's AAA-rated stability that we keep mentioning, and the resurgence of high-end tourism and cultural visibility. Think events like the Muscat International Film Festival. They drive specific high net worth traffic that sees these properties.
So it's visibility plus stability.
Exactly. The doubling in value isn't just general market lift. It reflects deep fundamental confidence in Oman's macro story. Remember, the low debt to GDP ratio combined with this massive boost in cultural relevance. When ultra-wealthy buyers see their peers acquiring legacy assets in an economy that is fundamentally stable, well, it creates a self-reinforcing prestige loop.
Okay, so we've covered the hotspots, the economics, the tech. Let's bring it all together. What does this deep dive mean for someone listening now who actually wants to execute an investment strategy? What are the essential, practical first steps?
Right, practicalities. First, absolute due diligence on the freehold zones. That's paramount. You must focus on confirmed investment areas, like Muscat Hills or maybe El Guber South. And here's a point that's often overlooked in the glossy brochures. Assess the infrastructure properly.
Like the Bateen Expressway you mentioned.
Precisely. The impact of something like the Bateen Expressway, which drastically cuts commute times to the capital, it instantly makes adjacent properties more desirable, more valuable. Infrastructure equals appreciation, often quite directly.
And the digital toolkit. We mentioned platforms offering analytics. If you had to pick 2 or 3 key metrics an investor should be obsessively tracking right now, what would they be?
Good question. You really need to use the market analytics tools available. Alan's platform is one example. Track real-time occupancy rates. They're hovering impressively around 92% across the desirable areas right now.
92% is very strong.
Very strong. And second, look closely at the net ROI projections. Don't get dazzled by gross figures. Focus on the 8–10% net figures, after all management fees and costs. Those are the true indicators of cash flow health for you as an investor.
Okay, let's tackle maybe the most innovative and perhaps complex part from the sources. Dr. Ghamari's work on financial innovation for transactions. We have to talk about EE Gold. What exactly is this stablecoin alternative, and why on earth would an international investor choose it over a simple traditional bank wire?
Right, EE Gold. It represents a potentially profound move towards financial efficiency and cross-border deals. Essentially, it's a stablecoin alternative that digitizes gold reserves. It acts as a medium for real estate transactions. So when an international investor uses EE Gold, they're basically using a gold-backed digital asset pegged to the value of gold rather than volatile fiat currency.
Okay, but is this actually secure, safe? It sounds like adding complexity. How does using a digital asset genuinely result in, what was it, a 15% saving, as some early adopters are reporting? That sounds almost too good to be true.
The savings claim comes from completely bypassing the traditional correspondent banking system. Think about international wire transfers.
Yeah.
They rely on multiple intermediary banks, right?
Yeah, SWIFT and all that, slow and expensive.
Exactly. It creates delays, high fees, and crucially, Forex fluctuation risk during the settlement period, which can take days. eGold aims to sidestep all of that. It enables potentially instant, seamless cross-border purchases without that currency risk during transit.
So the saving isn't just fees, it's avoiding the currency risk window.
Precisely. That reported 15% saving is likely realized by avoiding those cumulative correspondent bank fees and the cost of hedging against Forex changes during the days it takes for a traditional wire to clear and settle. And, to your point about security, all transactions are recorded on a blockchain subject to audits. This ensures transparency and regulatory compliance that arguably can even exceed the audit trail of some legacy banking systems.
That really does reframe cross-border investment then, taking what's usually an illiquid, a high-friction transaction and making it potentially low-friction, almost purely digital.
It absolutely does. So if we recap the big picture for you, the main takeaway from all these sources seems clear. The trends in Muscat, from the proactive infrastructure planning to financial innovation like tokenization and EE Gold, they're positioning the market for potentially strong long-term outperformance. This feels like patient, intelligent capital at work, not just speculative betting.
And if we're looking for just one macro confirmation signal, something that shows the global community agrees with this assessment, what should we be tracking right now?
Keep a very close eye on foreign direct investment, FDI flows. Insights from the Allen Times showed Oman's FDI inflows topped, $5 billion just last quarter.
$5 billion, okay.
That kind of volume demonstrates serious, sustained global commitment to the market. It really validates that low-risk horizon we've been discussing.
Okay, that brings us perfectly to our final provocative thought for you, the listener, to chew on. We heard that properties in these high-growth hotspots, Al Mouj, Qurum, Al Quoud, They showed 25% higher engagement on investor forums compared to market averages. You can track this with sentiment trackers now.
That digital footprint.
Exactly. So the question is, does this intense, quantifiable digital buzz signal that these assets are better suited for faster flips simply because they have heightened visibility? Or does that high engagement actually indicate better passive income potential, reflecting deeper, long-term investor interest? And maybe more importantly, how can you use that sentiment data, combined with these new financial tools we've discussed, to inform your very next investment decision in a market defined by both old-world prestige and cutting-edge innovation? Something to mull over until our next deep dive.